Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with another weekly news. And of course, the man that can only bring us the news is Nick Bendel. Hello, Nick.
Hello, Owen. Now, are you saying I'm the only one who can bring the news, or are you saying the only thing that I can bring is the news?
No, you're the only one that can bring us the news.
Okay, legally, you mean?
Well, on this podcast, yes, you're in this segment of the podcast, you're the only man that can bring us the news.
The only man who can bring the news.
Well, you're the only person and you are a man. So yes, as a result, as a default, you're the only man that can bring us the news.
So the only person who can bring the news.
Yes.
So a horse could replace me, is what you're saying.
Well, I doubt it.
But you're investigating.
Because unless you resurrect Mr. Ed, I don't think I've never met any other horse that could talk and bring us the news.
When I was growing up, my parents sometimes accused me of being pedantic. Does that surprise you?
Well, another word would come to mind, but yeah. So I have generally kept this podcast fairly clean. So we'll I'll save that for when we stop recording.
Okay, fantastic. Would you like to ask me what I've been up to recently?
Yes, Nick. What have you been up to recently?
That question took me completely by surprise, but seeing as you asked, I own, if you didn't know, I own a copywriting agency called Hunter and Scribe, which writes content for finance and property professionals throughout Australia. And one of the things we're really good at is writing award submissions. And one of our clients recently won an award at the MFAA Excellence Awards, which of course was very exciting for the client. I was really happy for them. And it's always nice when one of your clients wins a national award. I enjoy the feeling every time.
Good, and I'll say congratulations to you because you're the one that wrote the submission. So I'll give you full credit, Nick.
Well, that's very kind of you. This particular client has built a really, really good business, and that meant I had a lot to work with when writing the submission.
Yes. Of course, the quality of your writing can only be a result of the quality of the subject matter. So
exactly, and if Mr. Ed was here, he would agree with that.
He would. I'm just trying to remember the jingle, but yes, we can look it up for next week. This week, yes, of course, we've had a busy week with leasing, and of course, we had end of month on Friday, the end of last week, which Fridays usually are, and it's yes, very successful week. Something that I'm not sure if I've mentioned in the last few weeks, but something that is coming up. We're looking to partner with a short-term rental management firm to be able to offer short-term rentals to our clients. So in terms of short-term rental management to our clients. So whether it's for Airbnb, holiday letting, or for corporate short-term, stay tuned. I'll be able to announce it hopefully within a few weeks of being able to offer that to our clients as well. So that means we'll be able to do standard long-term residential, commercial management, as well as short-term. So we're covering all the bases, Nick.
That is very
soon
exciting.
will be.
So you've got a partner in mind?
I do. So we're just working out how it would all work and the processes, and so that we can announce it officially at some point in the near future.
Okay, well, that is very, very exciting. I look forward to that announcement.
Yes. Um, Nick, what's in the news? Hit me with
Well,
it.
as always, we've got three stories for you, and the first story is banking regulator flags mortgage reform. APRA is taking steps to boost competition in the mortgage market by easing the regulatory load on non-major banks. APRA Chair John Lonsdale said the banking regulator would consider letting second-tier lenders use internal credit risk models, a change that could lower the amount of capital they're required to hold against mortgages and free them up to offer more competitive pricing. Mr. Lonsdale also outlined a new three-tiered regulatory framework to ensure oversight is proportionate to the size and complexity of each institution. APRA will also simplify its licensing process to help new banks launch and grow. While pushing for more flexibility, Lonsdale stood firm on the mortgage serviceability buffer of 3 percentage points, citing concerns that falling rates could lead to riskier lending if buffers were relaxed. Owen, what do you think of APRA's decision to reduce the capital requirements for second-tier lenders?
I think it's a good move. We have a pretty stable and robust banking system here in Australia, going back to the GFC in the late 2000s. We were hardly affected at all by that financial crisis, worldwide financial crisis, as a result of our pretty robust regulatory system. So, but the glaring thing in our financial marketplace is that it's dominated by a few very large players. So we need more competition. So anything that can increase competition is a good thing. And I think we've been regulated to death in the last 10 years or so, and allowing banks to be able to um, put their money on the line, to be able to go out there and take some risks. And I think it's a good thing. And I think individual borrowers need to learn how to manage their own risks and and take responsibility for the decisions that they make. So yeah, I think it's a good thing.
I've over the years, so many of these second-tier lenders have made the point that it's not a level playing field. The big four banks, because there's, I think, an assumption by the market that they're too big to fail, they enjoy lower funding costs than other lenders,
Yep.
and in terms of the capital requirements, they've also enjoyed more generous capital requirements than other lenders. So I guess these reforms, they can't do anything about that first thing, but they can level the playing field when it comes to the capital requirements.
Yep.
I'm wondering, to go on to another of APRA's changes, which was simplify the licensing process for new banks. Well, what do you think of that?
Anything that is a simplification of regulatory requirements, as long as it ticks all of the necessary boxes, um, and if it's going to create more competition in the market, yeah, absolute no-brainer.
Yeah, as you say, you have to make sure that we don't want too much regulation, but I guess we do want some regulation. We want the appropriate amount of regulation, and you just have to make sure that this reduces things from too much to the right amount.
Yes, don't disagree there. Yeah, looking forward to seeing many more offerings out there in the banking marketplace.
And do you think APRA's right to keep the serviceability buffer at 3 percentage points?
Hmm. Um, that has been something that I mean, it hasn't been a bad thing. It's another way of a regulator that isn't the government, of uh, tweaking. It's almost like a sub form of monetary policy,
Hmm.
where the RBA is the one that sets monetary policy with interest rates. But then APRA, it's just like, well, we, in terms of funding, especially for residential funding, which is the regulated form of it, yes, we can actually set the buffer. So that is one where if APRA feels like the residential marketplace is getting out of, in terms of growth, is getting out of hand, and we need to tweak the demand, then yes, they can play with the serviceability rate to be able to make that happen. But when we have very low interest rates like we have in past years, having a higher buffer rate can actually be beneficial for borrowers in the long term, because when we have a very steep increase in interest rates, then people don't get surprised and become have mortgages that are out of reach and unaffordable.
Let's move on to our second story. Inflation falls again. The annual headline inflation rate fell to just 2.1% in the June quarter, compared to 2.4% in the previous quarter and 3.8% in the previous year, according to the Australian Bureau of Statistics. However, it is possible that inflation will rise again. That's because the last 4 quarters of inflation were 0.2% in September and 0.2% in December, but 0.9% in March and now 0.7% in June. If inflation in the September 2025 quarter is higher than the 0.2% recorded in the September 2024 quarter, then annual inflation will rise. And if inflation in the December 2025 quarter is higher than the 0.2% recorded in the December 2024 quarters, then annual inflation will rise again. But focusing just on the latest numbers, Owen, down to 2.1% for the June quarter, what do you make of that?
Yes, well, it's not a bad thing, but as you've pointed out, that's it's really the 0.7% was just lower than the June quarter on the previous year, so that's why it's continuing to go down. But quarter on quarter, it's a lot higher than it was in the first 6 months of the current 12 months. So it's yes, the next 2 quarters is going to be what's going to let us know what's going to happen long term with inflation, and whether or not we can really sustain any interest rate drops. So yes, watch this space. It'll be a very interesting one.
And as you alluded to a moment ago, inflation in the past 2 quarters was 0.9% and 0.7%. What do you think accounts for those reasonably high numbers?
It was mixed from reading some of the notes, and I don't have that in front of me right now, but there was some mixed increases and decreases. So when they look at the basket of goods and services that they to be able to, and the weighting that they give to each product and service that they put in there to measure inflation. Yes, it was a bit of a mixed bag of a lot of things were dropping, like from memory, like transport was dropping. But we still had things like cost of housing increasing, although it was increasing at a lower rate. So it's so there's lots of things that skew it and push it all over the place. And in general, if we have things like groceries and those everyday essentials are coming down in price, as well as fuel, they're the things, and they're the things that hit the hip pocket on a regular basis. Housing, unfortunately, I think in the short term, we're still going to see increases, although at a steadily reducing rate.
So as we've been discussing, we've got things pointing in opposite directions. the RBA's got a target range of 2 to 3% for inflation, so it's now down to 2.1%, which is right at the bottom. However, the last two quarters, 0.9 and 0.7, they are both above the quarterly target range. And as we've discussed, there's a good chance that annual inflation will rise. The next RBA meeting is on August the 12th. What should the RBA do, Owen? Keep rates on hold or cut?
Oh, it's interesting. It's they all surprised us with the keeping on hold last meeting. So they might have a wait and see again, and yes, it'll be very interesting. It's it's they don't want to inflate the residential property market any more than is required. And if inflation is still sort of bouncing around a bit and it's causing some concerns, this RBA board and governor is more inclined to wait and see, hold steady.
I have a track record of getting these things spectacularly wrong. I was sure the RBA was going to cut last month, and now I think they're going to keep things on hold.
Yeah, so you never know. Half the time you're right and half the time you're wrong, and the rest of the time it's just like, well, yeah, we don't really know.
Well, I liked your point a moment ago. You never know. In my case, actually, I do never know. I get it wrong all the time, so I never know. So for anyone wondering what the RBA will do, given that I'm saying they're going to leave rates on hold, that probably means they're going to cut.
Well, we'll see. We'll see
We
who's
will.
right.
Let's move on to our final story. Monthly building approvals climb to highest level since 2023. There has been mixed news in terms of the home building pipeline. On the one hand, a total of 17,076 approvals were issued in June, which was 11.9% higher than the previous month and 27.4% higher than the previous year, and the highest level since 2023, according to the Australian Bureau of Statistics. On the other hand, only 187,333 approvals were issued during the year to June. The federal government is aiming to facilitate the building of 240,000 new homes per year in the 5 years to June 2029, which means we are still well behind the target. Housing Industry Association senior economist Tom Devitt said the lift in home building activity needed to be driven not by detached houses, but multi-units. Multi-unit commencements need to double from current levels in order to achieve the government's housing targets, he said. This is unlikely to occur under current policies. Labour and land shortages, obstructionist regulations, and punitive surcharges on institutional investors have pushed improving sentiment away from apartments back into the detached housing sector. Owen, you've spoken in the past about the poor record of federal and state governments in terms of home building. So were you surprised to see the number of building approvals in June reach a 2-year high?
Well, it's good to see that it's increasing, but really it's falling well short of any target that we really need to be achieving. And for it to be the highest since 2023, which was when we should have been increasing dramatically since then, it's really quite a sad story. It's the focus of these federal and state governments have been too much on high-rise, high-density dwellings that they're relying on to hit their targets. But these types of developments are too bogged down in red tape, too bogged down in unions insisting on minimum wages, which are just cutting into the viability of these projects and just pushing up the general cost of these projects. So these ones, they're not even getting to the point of submission for approval. So yes, with federal and state Labor governments, trying to pander to the union movement for these large-scale developments. Yeah, we're never going to hit these targets. We need to focus on these smaller dwellings that can get approved and built quickly. We need to replace these single dwellings on large blocks with multi-dwellings that can be built quickly, even if it's just a duplex or a dual occupancy or a granny flat in the backyard. Anything where we can get them built quickly to be able to uh, handle the lack of supply in the marketplace and this high demand. So, yeah.
Well, to get more multi-units built, as you've been proposing, we would need developers and institutional investors to commit more funds. What can federal and state governments do to encourage that investment?
Well, developers and institutional investors would be quite happy to commit more funds if it was going to be a viable project. When you've got increased costs of materials and increased costs of labor, then yeah, we're never going to see any of these larger projects get out of the ground because developers and institutional investors just can't see a return on their funds. So, it's apart from government themselves committing to fund these projects, which is just going to mean that the taxpayer is going to overpay for these developments to go through. It's are we expected as the taxpayer to pick up the loss? So yes, they need to commit to reforming the red tape to take back the power away from unions that are insisting on higher wages, which is just outpricing the viability of any of these projects.
More broadly, the federal government has talked a good game on residential construction since coming to power in 2022. Do you think, though, Owen, that their actions have matched their words?
No, it's well, certainly the results have not matched their words. What if they're doing things in the background to be able to try and make these things happen? Then that would be great. It'd be great to know these things, and I would hope that they are actually getting done. But the results speak for themselves. That whatever actions they're taking, they're not getting the results. So yeah, they need to double down. They need to stop worrying about all these other useless issues that are distracting them, and just focus on this housing issue for one, so that people can live in a house, whether it's renting or owning, and it be not so expensive. Have it be more affordable.
We've covered quite a bit of ground in this chat. Banking reform, inflation, housing supply. Thank you, Owen, for sharing your thoughts.
Thank you, Nick, and of course you bring the news. So thank you for bringing the variety, and yes, you bring the news, and I'll always have an opinion about it.